Well, the Bikaji Foods IPO has opened for subscription today. It'll run all the way till the 7th of November. We have the management with us in the studio, but before we get to them, let's hop across to Mangalam. He's joining us to give us a quick overview of the company as well as the issue details. Mangalam.
Well, it's an offer for sale. So it's an 881 crore offer for sale. So no money is fresh which goes to the company. But importantly, they're seeking a market cap of almost 7,500 crores. Bikaji is the third largest ethnic snacks company in India. 35% of their revenues coming from bhujia, 39% from namkeen, the rest coming in from sweets, western snacks, as well as some other products. We know the strengths of the company with a strong brand, the distribution that they have, and importantly, they have capacity headroom as well. But if you just take a look at the risks, the biggest risk is competition coming in from local brands, strong domestic brands like Haldiram's, etc., and MNCs as well. The second risk is that the geographical limitation or the GI patent limitation of concentrating their factories around Bikaner itself because of Bikaneri bhujia. Aggregate value of related party transactions for the company have been around 10% of their revenues as well, and they have unsecured investments, debt investments to group companies to the tune of almost 117 crores. And finally, the raw material inflation for the company may impact their margins, as we've seen for a lot of the food companies over the last couple of years. In FY22, they did revenues of almost 1,611 odd crores with margins of around 7% and a net profit of 76 crores. The quarter gone by, they did profit of around 15 crores. So even if you assume that that run rate grows to around 25 to 30 odd crores, assuming 100 to 120 crores in terms of PAT for FY24, the company is valued at around 58 to 60 times FY24 earnings, elevated even by FMCG standards.
Okay, thanks a lot for that. I guess the company needs no introduction, right? Almost anyone and everyone has had bhujia, and Bikaji is a brand that's well known. We have the management here, Deepak Agarwal, the Managing Director, and Rishabh Jain, the CFO of the company, is with us. Gentlemen, thanks for being here with us in the studio. One thing that stands out, and as even Mangalam was pointing out, is that the revenue trajectory for the company over the past 3 years has been strong and consistent. I mean, the last 3 financial years, you've done on an average 22% growth. Yeah. Is this something that the company can sustain? And if yes, what would the growth triggers be?
Yeah, if you see the historically that, we have what we have grown as on the CAGR rate, so same we are expecting for the next 4 to 5 years. Okay. And the kind of a product basket what we have is a huge one, almost we have a more than 250 varieties, and we are in the categories of like, sweets, namkeen, papad. And sweets and papad is not a forte for all the MNCs companies or other companies. It requires a special skill and experience and the legacy what we have. So we expect, and the unorganized market are very still very high. In sweet market, it's only 10% is only organized. So we are expecting a big revolution in next 10 to 15 years in the sweets market and as well in the savories market.
Okay, all right. Good to hear. You'll have grown quite well and you're quite confident about growth from here on as well. And I think with regard to that shift from unorganized to organized, it's been happening over the last few years, and the hope is that it continues. Yes. That will give us further headroom. But let's get to a couple of numbers. Last year, you did around 1,600 crores. Going by the SEBI regulations, you all can't give a forward number. But could you tell us what is the potential? I think you'll be functioning at around 35 to around 55% utilization levels across your divisions. Yeah. So at peak levels, what kind of a revenue can you all do?
So see, basically from revenue perspective, so we are into multi-category company. We are in bhujia, namkeen, papad, sweets, right? And this industry size is close to 1.5 lakh crore market. Right. And we are at close, last year we closed 600 crore rupees. 1%. So it's a big headroom going forward. It's a big, it's all about execution. And number 2, capacity utilization. So currently we are at 40-45%. And 18 months back, we have plant only in Bikaner, but in last 18 months, we came with plant across all part of India. Right. So like Rajasthan, Assam and Bihar, these 3 are our core market, where we are having leadership market position. Like in Rajasthan, we are having market share of 45% in ethnic snacks market. In Assam, we have market share of 58%. In Bihar, we have market share of 29%. So we are having a very strong market leadership position across all 3 markets. And we started focusing on 4 states in North India, like UP, Delhi, Haryana, Punjab, and 2 states in South, like Karnataka and Telangana. So these 6 states we started focusing on. And utilization, so we came up plant across all parts. Of course, PLI, So we got PLI incentive scheme. We got a PLI close to 261 crore rupees, which government has backed us, and government want to make few players in India as a global player, and out of which they have chosen Bikaji Foods.
So Rishabh, just to take that point forward, if you're at 45% utilization levels, at peak you can do 3,500 crores. So is that a fair estimate?
We can comfortably, so in ethnic snacks, special snacks, we can comfortably do it at level with current capacity.
3,500 crores, or is it
very
more?
comfortably?
Very comfortably.
Yeah.
Okay.
Have you done those kind of numbers in the past?
So see, we currently, so in last 2 years we've done major expansion across all part of India. So we can comfortably do it 3.5, 4 type of asset turnover ratio. That's what it looks like.
What is, I mean, so you said you're expanding into other regions as well. Is there a geographical limitation, or there is no limitation? Because I mean, different parts of the sort of country have different sort of local preferences, etc. as well. Or is it, or your offerings differ from market to market, like in Assam, Rajasthan, as you said, in North India as well?
Actually, you know, in the product basket, if you can see that, then we have a South Indian range also. We have a, you know, Northeast range like Calcutta, Chanachur, or Jalmudi and all this. If you see, then we have a Indori mixtures, we have a Gujarati mixture. So we cover all kind of a, you know, regional taste as well. And to set up a factories like in Assam, Bihar, South India, Tumkur and UP, that gives us a, you know, benefit of a supply cost and logistic cost. And even in the Western snacks, you know, like in chips or even a light murmura and all this, it is, you know, very difficult to sell from our place from Bikaner to, because the logistic cost and supply cost will always, you know, makes higher.
Sure.
So that's why, you know, we have put up the deliveries and freshness will also continue if we, you know, put up
Sure. So just one follow-up to the, you know, the 3,500 crore potential that you have. In this year, in FY24, what are we looking at in terms of revenues? Because I know you don't want to give a forward projection, but just if you go by the historic trend, right, of 20 to 24%, you could hit about 2,000 crores as well. Will you realize that 3,500 crores in this fiscal itself, next fiscal, what's the target?
So of course we cannot give projection, but yeah, in Q1 of this year, we're growing 25% growth over last quarter.
Okay.
Okay, so and this is the first Diwali where people have gone across all part post-COVID, and they've been free, and we have seen good demand in sweet segment, gifting segment, and we are seeing good growth in this year.
But how do you you know, compensate for the ad spends? Because I'm sure you're seeing a lot of competition from the likes of Haldirams, etc. Will your ad spends as a proportion to your sales go up in the quarters to come?
In last 2-3 years, we've done ad spend of close to 1.752%, right? And that's the number we have always parked on in our P&L, and we are one of the highest ad spend in our segment, in our sweet savory segment. Yeah.
Okay, all right. You know, two-part question then, and I think for your business, the distribution is more important, if not as important as the ad spends, because distribution, your reach is very, very important. So a couple of questions. Now, palm oil prices have cooled off.
Yeah.
You know, various input costs as well have cooled off. You're looking at scaling up.
Yes.
So you can't give us a number, but second half of the year, margins will improve in comparison to the first half. And also exports, well, we also want to enjoy the namkeen, but I think the export market as well has opened up. It's around 5% of your revenue. Where do you see that number headed to?
See, basically in first quarter, it was toughest for across all the food brand in India. So we had done a bit of close to 7.3, 7.4%, which was toughest actually, where edible oil was at 150 or 160 rupees a liter. And post first quarter, we have seen cooling off across all edible oil, key pulses or paper prices also cooled off, crude is also cooled off. So we are seeing good numbers in. We are coming in normalized EBITDA. That's what it looks like.
So normalized will be what, towards double digits? Will it be high single digits? On we are not getting a guidance from you. We are asking you what is the normalized number.
So yeah, of course, it's a double-digit type.
Double-digit type of, and export market from 5%. How much can it contribute?
See, so we also entered into new category, frozen plant. We entered into new category, frozen plant.
Okay.
So we have put up a plant of frozen. So it will come in next 1 year, and that's a special focus for us.
Apart from competition generally, there are different cuisines also now. I mean, 20 years, 25 years when you know, we were growing up, there wasn't that much choice. Now there is choice, right?
Yes.
I mean, there's a burger, there's a pizza, and there's of course Indian snacks, etc. as well. Do you have to cater to all of that? I mean, I'm seeing Western snacks, for example, is about 9% of your revenue mix.
Yeah.
Do you have to aggressively expand the portfolio to meet that competition, Deepak?
Yeah, like, we are also expanding into the Western snacks, but, the Western snacks category is also required some expertise. And nowadays, the extruded snacks is very much in the trend. And we always, make our products with the Indianized, taste and with Indianized ingredients. So the Western snacks will also take some part of this, but we don't foresee in our brand, too much, a bigger Western snacks market. But for sure, for double digit, it would be even in the Western snacks category.
Okay.
And as in distribution, I would like to highlight that, today we have almost all 2,000 distributors across India, and whether it is direct and indirect.
Okay, that's a lot. Just one concern about the unsecured debt investments of over 100 crores in group companies. It's a niggling worry for investors. Any thoughts there?
Basically, we invested close to 100 crore rupees in Hanuman Agro Foods. Okay, that's a part. That's a group company, and we issued CCD and CCPS. Okay, once it will get converted, it will become a 100% subsidiary of Bikaji Foods.
Okay.
Yeah, so that's investment which we have done.
So any more such investments that you have planned?
So yeah, that's the only investment, major investment which we have done. Other are very small investment, but major investment was Hanuman Agro. Once this will get converted, we'll get some approvals from local authority. It will become a subsidiary of Bikaji Foods.
Okay, gentlemen, all the best. But low-key, we are disappointed that you didn't get us any sweets here in the studio. I promise you, I was expecting at least one dabba of Kaju Katri or something, since all that talk about sweets.
Ma'am, we have brought it.
Okay. No, I'm just kidding. I'm just kidding.
Were you kidding? So, I don't think you were kidding.
Some bhujia in the break.
Also, one thing which I'd like to highlight.
Yeah.
So we got one of the best names in anchor investors. So you see, we came out with anchor list.
Yeah.
And likes of GIC, Morgan, GSM, or likes of HDFC Pro, HDFC, ICICI, Tata, Edelweiss, all the big names in mutual funds.
Gentlemen, we tracked that last night. Once you'll put that release out, so we have got that number. We wish you all the best. But on listing, we're hoping that you'll join us yet again, and then we could discuss a few more numbers. The point on the revenues, otherwise it appeared it was trading at around 4.5 times. You'll come at around 4.5 times sales. But if I take that 3,500 crores,
FY22 number.
Then on a trailing basis. But going by the potential, it'll be around 2.5 times.
Yes.
Not cheap. But let's see how you'll do from here on. Thanks so much for joining and giving us all those details.
Thank you.
Thank you.
Okay, that's Bikaji Foods. All the best with your IPO. That's the latest IPO on the street and soon to be debutant. But the other stock that's really surging away right now is M&M Financial. They posted their earnings and also the business update for October. The Q2 disbursals are at a 16-quarter high, which is also translated into very good AUM growth. But the net interest margins are under pressure. The collection efficiency for October has also dipped sharply. Ramesh Iyer, who's the Vice Chairman and Managing Director of M&M Financial, joins us now to talk about that. Mr. Iyer, thanks for joining in and congratulations on a strong set of numbers. Of course, the gross NPA ratio has deteriorated. I'll come to that in a bit. But before that, I just wanted to ask you a little bit about the disbursements itself. It grew very rapidly in October, but the collection efficiency has dipped. Can you tell us the reason for that and what would be the full year target? Would you want to change it?
So, yes, disbursements are extremely robust. I don't know from where you get this. The collection efficiencies are substantially dipped. Maybe you're comparing it to September number. If you look at October over October, it's remained where it was. And you will see the crop money come in between November, December, and this quarter should also see similar collection efficiencies, and we don't have a problem on that front. Overall, we are very happy with the way the rural market has been performing, both in terms of demand for product as well as for the collections and collection efficiency, leading to improvement in our NPA quarter over quarter.
So, Mr. Iyer, there's a chart on the screen, right? We're comparing the collection efficiency, which was 91% in October. Even if you look at the last 4 months, I mean, on an average, you've done collection efficiencies of in excess of 97%. So that's the comparison, and hence that big dip is what I was referring to.
Right? When it's a festival month, it's always people want to use their money for their immediate requirement. And that's why I said that if you look at the quarter, this will be able to cover it up very easily. And, typically what happens is these are all, we have to go to the customer, collect, customer comes to the branch and makes payment, etc. And you have 6 or 7 holidays between Dussehra, Diwali combined that get accumulated and starts to come in the month of November. Okay. So if the festivals get spread over 2 months, you will see a very different number. If they come in the same month, you'll see a different number.
Okay, all right. Hi, Mr. Iyer. First of all, congratulations. A pretty good set of numbers is what you've reported, and the street likes it. But they'll want to know what's the trajectory going ahead. On disbursements, October is very good, more than 5,000 crores odd. What is the run rate you're looking at maintaining? For quarter two, it was around 3,500 odd. So what is the disbursement run rate that we're looking at? And also on NIMs. Now, the cost of borrowing is going up. The yields as well had come down a little bit. So steady state NIMs, should you be maintaining in that vicinity of around 7.5%?
So clearly, NIMS has two angles to this. One, we have gone for a little high-end customers as well in the rural market that helps stabilize our NPA even going forward. And they come at a little lower yield. And therefore, product mix does cause some yield dip, but that should be more than compensated as we go along, both from cost of operation as well as from the NPA that these portfolios will expect to provide. As far as the cost of borrowing is concerned, undoubtedly they have gone up. Plus, we are also holding some additional funds considering the liquidity situation, and there is a holding cost that's happening to that as well. We have started moving up our rates on the lending side, and they will catch up with a lag. And therefore, if you look at the next 2 quarters, you'll start seeing NIMs improvement on the portfolio where the rate increase is beginning to happen. We are confident that the NIMs would be maintained over period, but it will have this little dip caused by the holding cost that we will have on the excess liquidity that we are carrying, which over a period as things starts to improve, we will also change.
So, Mr. Iyer, NIMs at 7.5%, right? And monthly disbursements should be what? 5,000 crores, 5,000 crores?
No, so 5,000 is an October number with festival demand, etc. I think we are averaging about 10,000 odd crore a quarter, and we don't see that a problem. The demand is holding up. Vehicle availability continues to be a pressure out there. And on even the pre-owned vehicle side, the supply is a constraint. As that they start to improve, you'll see further disbursement growth. But clearly maintaining a 10,000 plus crore disbursement should not be a challenge.
Okay, 10,000 crore disbursement, maintaining that should not be a challenge. Got that. Within the gamut that you service, right? I mean, you do look at tractor loans, utility vehicle, car loans, commercial vehicle. And within that, we've seen some spaces like tractors come back in a big way. Can you tell us where is the maximum demand coming in from and what are the growth rates across segments?
So we've seen this across the country, across the product. Today, the real challenge as we see it is availability. If there were sufficient vehicles available, even I'm talking including pre-owned vehicle, you would have seen even much better numbers. So there are customers in the waiting whose loan processing has been completed, but disbursements have not happened because of the vehicles non-availability, etc. So clearly, there's no pressure I see on the demand side, and I'm talking across geography. And it may be interesting to know that, and we've talked about it several times, the second half for rural is the best half. And fortunately, the monsoons have been good, support prices seems to be good, infra is opening up. So we are very, very positive in terms of the trends that we see in the rural market, both from demand as well as from the collection front.
Okay, all right. Mr. Iyer, look, going through your presentation and you're guiding for margins of around 7.5%, it appears the street has taken that. But the ROAs, I think in the past quarter, it was, for the first half, it's around 1.7, 1.8% odd. Now, you're guiding for around 2.5%. How confident are you that you get to that? Because most of the street are still around that 2.1% odd. So how confident are you on the ROA front? And the second part is AUM growth for the year. What will it be?
So we are already clocking 15-16% growth, and the disbursements are more aggressive as we see from the numbers. So therefore, maintaining this kind of a double-digit growth on the AUM should not be a challenge again. In as far as the 2.5% ROA is concerned, that was our strategy we have put out for 3 years when we spoke last March. And I think we will get there very clearly. I think one area where we need to concentrate, which is what we are doing, is our cost of operations. Currently, the cost of operation is a little elevated because we are over-invested into future need, whether it's in the technology, digital, or the data space, including, we've taken some salary correction because of the last 2 years, it was very subdued increase. So that's all done. Now, if with the same cost, if we produce more, which is what the trend is, I think you will start seeing even correction to the overheads beginning to happen. And that's the time you will see more clear visibility of our moving towards the 2.5%.
Okay, a slightly longer term question, Mr. Iyer, since you have your ear to the ground as far as the commercial vehicle, the tractor industry is concerned, at what stage of this upcycle are we in right now?
See, in tractors, I'm just beginning to see the contracting segment buying. What we saw in the past is the farm segment buying. I think we are seeing the contracting segment buying. I am very hopeful that this will continue for a little longer. In as far as commercial vehicle is concerned, one trend that we are seeing is less than 5 truck owners are still not coming out to buy, because one is the asset cost is definitely very high, but along with that, the freight rates or that's not gone up substantially to accommodate for the cost, and therefore less than 5 vehicle owners are still not there. It's largely the 10 plus, the fleet operators who are buying more. So until such time we don't see that segment of buyers come in, it's difficult to kind of say how long, but the fleet operator acquisition is very high.
All right. Mr. Iyer, thank you very much. Good speaking with you. Appreciate you joining us on the channel today with all that detail. The market, by the way, is down about, 20 points, which is remarkable given the global backdrop. But we've had these kind of remarkable days in the past. We've had even more remarkable days in the past when, the US was not down 3%, was down 4.5% in some cases. And I remember that one instance when the market here was in the green. This is in line with that. So just 20 points cut. By the way, Bank Nifty is in the green. If you can have that intraday up, mid-cap index is in the green. The small-cap index is in the green as well. Market breadth is positive. So on my screen, you've got 1,200 stocks which are higher and about 800 stocks which are lower at this point in time. And there is, lots of stuff which is moving around. Defense as a theme is doing very well. Mazgaon Dock, for example, is up another 5.5%. Garden Reach Shipbuilders, the move in Mazgaon came first. Garden Reach followed, but it's picked up quite a bit. 7.5 on Garden Reach Shipbuilders. Cochin Shipyard, which was doing very well yesterday, it's up another 2.5% right now. Look at Bharat Electronics. That is up another 3.5%. So defense, HAL is another one. Hindustan Aeronautics, another 2.5% today as well. So that's one theme which is super strong, along with a bunch of other stuff. We'll take a very quick break here. Mitesh Thakkar joins us with some trading ideas and the setup now after the initial 1 hour. Back with that in just a bit.
Well, the dips have gotten bought, and you're seeing it in the mid-cap index, the Bank Nifty. Even the Nifty has cut all of its losses of early morning and now almost trending into the green line, down about 0.3%. But off the day's lows. Mitesh Thakkar is joining in to give us some technical trades. Mitesh, very resilient market. Your view now, the Bank Nifty is surging. What are the stocks you'd look at for the next couple of hours?
So I think the market, I think, we were of the opinion that we'll use this decline to buy into it because the overall trend is on the upside, but this could be a situation where some profit booking and pullbacks to the moving averages is happening. I think the price had run away far from the moving averages, so I think that kind of consolidation movement could happen. I think that might still go on for next few days. So buy on dips remains the ideal strategy. On the stock side, I have two buy calls. The first one is a buy on Berger Paints. Keep a stop below 585 here, look for targets of 615, and BEL, I think Prashant already highlighted that. That's a good breakout. That's a buy with a stop at 109 for targets of 116.
Okay, all right. Thanks a lot for that, Mitesh. By the way, just pull up the intraday chart of Tata Motors DVR. I think we should get that up. The last 1 month or so, the stock has been a big outperformer. The street was anticipating something, but suddenly slam dunk out there. It's down close to around 8.5% odd. So just keep an eye out. Last 1 month or so, it was up 25%. Now it's trimmed some of those gains. So I think that one should be on your radar. For the time being, let's take a break from the equity markets, focusing on the commodity markets. Manisha Gupta standing by to tell us all about that. Manisha.
Thank you for that, Nigel. Well, some resilience is what we are seeing in the commodity markets as well. After a knee-jerk reaction, especially after the US Fed announcement and statements, we've seen some buying come back in case of crude as well. So even after that decline, it still is holding around those 3-week highs. 0.5% down on your screens, but $95 per barrel is still holding, and we are inching towards that 96. Yesterday's high was 97, so off those kind of highs, but as I said, still holding on the higher side of the range for the crude oil prices there. Well, the US Fed did say that the ultimate level of rates will be higher than previously expected, and that is something that the markets will be readying themselves for the next 1 month, looking at various economic data. What the street will now watch out for, though, is the Bank of England monetary policy meeting tonight, with the expectation that you could be looking at a 75 basis point rate hike from them as well. But when you look at the Asian economic data, that has been on the positive side. So whether it has been numbers coming in from Australia, Japan, or even Singapore, the service numbers have been on the positive side. The crude price is also taking support from the European Union embargo, which is slated for December 5th on Russian oil. If that happens, you could be looking at some tightness in the global markets yet again. It also is about the Saudi Arabia sharing intelligence on possible attacks from Iran. So that geopolitical premium also seems to be building up into the markets right now. But I also want to talk about the US crude inventories, which have continued to decline for a second straight month. That is adding premium to prices there. And when you look at the output, well, OPEC has said that they will cut output by 2 million barrels per day for the month of November. When you look at the October rate card or the report card, that tells you that OPEC is producing less than what they had agreed to begin with. So a shortfall in the month of October has been at 1.36 million barrels per day from OPEC, and within OPEC countries as well, barring Algeria and Nigeria, perhaps you are looking at a shortfall coming in from various other OPEC countries there. So as I said, UAE is another one which is producing excess. Otherwise, all other countries, member countries within OPEC are producing lesser. Markets are anticipating the Chinese as an economy to start easing their COVID restrictions from March 2023. That demand could come back into the markets, and the Asian demand is expected to be on the stronger side as well.
Okay, you spoke about Bank of England, right? All set for a 75 basis points rate hike. After the Fed did it, Bank of England saying, I don't want to be too far behind, joining in the party. But, well, no jokes there. It's the biggest rate hike in 33 years that the Bank of England is all set to announce. But there is still a dovish tilt that they're expecting in the commentary. Let's slip into a short break on that note. But as we mentioned earlier, the big story of the day, the Fed chair has sounded more hawkish than expected. What does this mean for peak US rates, for the dollar index, rupee and others? On the other side of the break, we have a special segment, It's the Economy. Lata Venkatesh will be in discussion with Steve Englander of Standard Chartered and Robert Sokin of Citi. Stay tuned.